Welcome to Investment 360. Joining us in studio now, Arno Lawrentz, Chief Investment Officer of Atlantic Asset Management. Arno, thanks for your time. We chatted at the end of last year. You were very bearish. We were glad that you were going to have a break and come back. We hope you're refreshed. Have you changed your stance, or are you still very somber about the outlook?
I am very somber. The break was good in the sense of market fatigue. So it's always one of those things when you've been going up, down, markets not really knowing which direction to actually trend, because it's very difficult to discern what the underlying driving forces are going to be. But the key thing for me was take a break, come back, re-evaluate all your views and positions. And the interesting thing was when we did this as a team, starting at the top and revisiting all those key themes that we had during the course of the year. And the amazing thing is that every single one of our themes, we said they're still in play. And re-evaluating the outlook, we came to one single conclusion, that it's more of the same. So does that mean I'm the same level of bearishness? And the answer is no. I'm still bearish in the sense of that there are bad things that are going to happen. But the key thing is, what are prices already discounted?
So perhaps let's just distill this and remind viewers, two key themes that you think are still in play, the two biggest themes, let's put it that way.
Yeah, look, the first one that we always have at the top of our list has been for the last 2 to 3 years now, has been the fact that interest rates, as far as the developed world, are going to stay low. That one, we say is
that's not rocket science.
No, but it's one of the most important things to bear in mind, because when it changes, the world's going to change, or the world will have changed, because they're not going to shift that until the world has changed. So it's an absolutely critical turning point.
Are you prepared to put a time frame to it? Are we looking at 3 years, 5 years, 10 years, where we're going to see interest rates in the developed world at around 0%?
I would suspect within the next 2 years that they would have to probably start moving up, because I think something has to give within the next 2 years for them to basically say, right, now we fix things and the sustainability side of things starts coming through, in which case they can start normalizing interest rates. But it's going to be a very, very slow process.
I think we're getting to the point.
No,
not at all. I think we're getting to the point where those decisions are going to be made. I think Greece is an example. You know, no one thought that they'd ever talk about a planned default, but it's happening. And I think people are accepting it. And they actually want to see resolution to the world's problem.
It's actually an unruly default that's entering.
It doesn't matter, it's a default. You can call it what you like, but it's happening.
Well, unruly default sounds worse than a planned default. A planned default sounds a lot better. Unruly is like a wild card factor.
They're not, yeah, anyway.
The other theme that you wanted to highlight, so beyond interest rates?
Yeah, look, beyond interest rates in that respect is really going to be about, if I bring it closer to home and saying what dominant factor is there going to be in the South African context, then it can only be about how is monetary policy going to respond. And there it's also fuzzy. We saw the SARB already, again being a bit more bearish. Yeah, but our view, going to be flat for the year, unless their hand gets forced via tipping into recession again in Europe, in which case, same as in 2008, 2009, growth here will suffer, in which case the SARB might be tempted to cut rates. But I think that's sort of not our base case scenario. For us, base case, flat. The one other further factor for us in global terms really must go down to, in a sense, looking at what is going on in Europe. That's the single biggest thing. We have two scenarios. Let's call it not the apocalypse scenario in Europe.
The breakup.
The breakup, in a sense, versus where all is well, that it's too big to fail, they're going to do what it takes. The vacillation between those two scenarios is what we think is going to happen all the way through 2012.
And inflation? Are you concerned about inflation? Because that's also what the South African Reserve Bank faces, obviously, as juggling this low growth scenario with the inflationary pressure coming through, and let's just mention food.
Yes.
And the inflation we're seeing on that front.
Yeah. Look, the rest of the world is still disinflationary. There's no doubt about that. And if Europe goes into some sort of recessionary conditions,
there's not a whiff of inflation anyway.
No. The global story will still ultimately dictate what's happening here. So yes, we've got an upward trend, but it's purely because of the basket that we have that's saying inflation's on a rising trend. Last week, inflation surprised on the downside. Very interesting one. Everybody was getting a little bit bearish about where inflation can get to in South Africa. We had a long discussion today with a client about inflation. And the point is that people get too bearish about inflation in South Africa, about the structural issues. You look at the trade unions and the salary demands and so forth. But and it's very easy when you see what school fees are doing and you get bearish about inflation. I think it's overdone.
Can't you feel, though, as a South African consumer, that the purchasing power of your money is being severely impacted? I'm certainly feeling it when I buy a basket of goods at
I think the one thing we discussed with Gulam the other night as well, Balim from Standard Bank, and I think the big concern was the food inflation coming through, because someone's going to pay for that, and it's generally at the bottom end of the market. And socially, that's a concern, because when the price of maize goes up, or the price of bread, or any basic good, eventually it's going to hurt people. And together with the increasing price of petrol, that's going to hurt people. And I'm scared of the social consequences of that. I don't care about the official inflation basket, as Bronwyn says. That doesn't concern us. We can live with that. It's academic. But it's when it really hurts people, when they have to go and buy their maize. It's
and
a
isn't
worry.
that happening?
Here's my response to that one, which is, yes, I agree, absolutely, it's a concern, and so forth. And the government has a safety net in terms of the welfare side of things in order to address some of that. But here's the other side of things. On a consistent basis over the last number of years is that wage increases have consistently been higher than inflation. So net, if you take the total, you can't say that particular person that net, employees have been earning higher than inflation increases.
So consumers are still
What worries
but
me,
the unemployed is the big problem.
what worries me, that's a redistribution from
Yes.
corporates to the workers.
Yes.
And that starts to tell. Have a look at some of our biggest taxpayers, the platinum companies. David Brown resigned not because he's at the top of his game or the company's at the top of the game. Anglo-Platts came out with poisonous results. And it just shows you that as long as we keep doing that, corporate South Africa is going to start to suffer. And that's a concern as well. That's also a tax base. So yes, while you've got great, consumption's going to continue and you're going to get good results from Woolworths and ShopRite, etc., the other side of the corporate scale is starting to suffer.
But then why are the dividend yields, the average dividend yield, so high relative to what it was?
Because those are not South African companies.
I beg to differ.
I'm just going to
Coronation
sitting
sitting with a dividend yield of roughly 7.
Coronation is, wait, let's not even
Let's
go
look at
there.
Astral, there's a whole bunch of these companies. You take your pick of dividend yields which are effectively close to cash.
Yeah, no, but Coronation is a slightly different, it's a different picture because it's a financial company that earns money on the amount of money that they get in. It's not really an operational company.
Yeah, I use that as one that's just top of mind.
If you look at Kumba, yes, it's an iron ore company, great dividend yield. A lot of the banks are still giving good dividend yield. Your best dividend yields are, coming in the growth. A lot of the growth in South African company, 70% of our all-share index earns dollars. In other words, earns its income from outside. That's that's very easy to justify.
As a resource company.
You mentioned
as not only resource, Richmond, SAB Miller, British American Tobacco, all those
good defensive companies.
Great companies.
David, I've never let the desk run away like this before, ever. But I have been enjoying the show. Kevin was putting me through my paces last night as well. I'm going to pull it back. We've got 2 minutes left. We'd be remiss if we didn't get your thoughts on Forex, on what's going to happen on the currency side of things, particularly the South African rand. Around about that 796 level. I know this is crystal ball gazing, but it's your game.
Sure. I think the biggest thing in the currency market at the moment is really about where's the euro going to. And a lot of people came out during the course of, especially the latter part of last year, saying euro is going to, basically 1 to the dollar, 100 to the dollar. And it's really going to be turning around in that respect. It's defied all of those predictions. I think the euro, the bearishness about the euro is overdone. Because if we strip out the Greeces and the Portugals and so forth, if they were to leave, right, worst case scenario, you're taking out the weak side of things, you're left with the strong side. I can't see that the euro ultimately falls apart in that respect. Too much or too big to fail. There's too much energy and time and political will invested in it.
Where do you see the euro?
I think it's going to, in this particular environment that we're seeing at the moment, I think right now it's probably poised for a bit of a nice move. Yeah, so perhaps closer to 135, 140 even.
How about this? If there were no barriers to holding your money in any currency, which one would you pick?
Okay, but you've got to tell me what term though. It could be for 1 day, 1 week, 1 month, 1 year, or 10 years.
You can't speak to fixed income. People like
because then we're going to hedge ourselves as well.
You give me a term. So let's just say, if you were to hold for the next year, could you take, is that a fair term?
That's a fair, yeah.
All right. So next year, you could choose any currency globally to put the majority of your wealth in.
Yes. Ooh,
A
majority
majority of your wealth.
Okay, I'm going to cheat as a fixed income manager. Is going to find a different way of solving the problem. I'm going to choose gold, which is going to be in dollar terms, I suppose, in a sense. I'll split it 3 ways: gold, euro, and rand.
Gold, euro, and rand. You see, we should have more time
that's a
to
weak
investigate now. We'll leave it there. Arno, thank you. Great having you in studio rather than in Cape Town.